Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're seeing my screen all right and hearing me clearly. All right, great. I've got enough responses. Looks like we're up and running fine. Thank you very much. If anyone has any issues as we go along, please feel free to let me know in the chat box. As always, keep in mind that no one trade is guaranteed to bring profits. Each and every trade that you take has risk of losses. The flip side of that is that each and every trade that you take has the potential for nice profits as well, which is why we're all here, to go after those potential profits, hopefully in a smart way that makes sense, making use of some technical analysis strategies and maybe some fundamental analysis as well. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Real quick before we get on the live charts and before we look at a few headlines maybe, what is technical analysis? Basically, it's looking at the historical movements on the price charts. Usually candlestick charts are what traders are using, and you look back at the past and you're looking for patterns, predictable movements, price levels that seem to be important or hard to break through. And when you find patterns and such that you think lend predictability to future movements, this is where your trading strategy then comes in based on that technical analysis of where you prefer to enter and exit. Obviously, the past is no guarantee of the future in terms of patterns and movements, but we do find that it's helpful to look back at the technical analysis on the charts and use that to maybe find areas that we prefer to get in and out of trades. And indicators, whether it's the RSI or stochastic indicator or whatever it might be, Bollinger Bands, they're looking back at those same movements. Those indicators, all the different kinds that are out there, are programmed to look back at a certain number of candles and look at the highs and the lows and work out an idea of when the indicator thinks, okay, it's gone up enough, now it's time to sell, or it's gone down enough and it's time to buy, usually with some visual representation from the indicator. You're kind of trading blind, I believe, if you're only using an indicator and just blindly trusting it. It's probably smart to understand how to manually read the charts so that you understand what it is that the indicator is looking at. And when you can manually do your technical analysis, then combine that with your indicators that you prefer to use. And now you've got not just one tool, but you've got a trading strategy where you have a checklist maybe of you want your manual technical analysis to agree with the signal coming from the indicator and maybe to agree with the direction that you think the fundamental news tells you should trade. And when all of those things are in alignment, then maybe you place your trade. And that's kind of the difference between using a trading tool like an indicator or using a trading strategy, which makes use of multiple tools, manual technical analysis, along with other tools like an indicator, etc. Okay, if you have any questions, you want to give any input as we go along, please feel free to do so. I'm happy to address any pertinent questions or share any pertinent comments that are in relation to what we're talking about. Now, real quick, before we get into the technical analysis, what are the headlines today? Well, kind of positive. The volatility index has been down all day. Then the futures had been up all day. The market opened in the green today out of the European Union, out of the US, etc. And the reason being is, as this headline says, there's an easing of geopolitical tensions. And specifically what they're talking about is Russia has said that they have or will be pulling troops away from the Ukrainian border, in part, not in totality necessarily, but in part pulling some troops back to go back to their bases, kind of toning down some of the stresses that were there, that there might be an imminent invasion occurring into the Ukraine from Russia. So that easing of tensions dropped the volatility index, maybe weakened the the fear out there enough that the stocks and the equities were able to climb. Okay. Someone's saying that they can't hear me. I'm just going to type a quick message. Ali, it is just you. Okay. So let's take a look. What's another headline? Crude oil slumps as Russia withdraws troops from Ukraine border. Okay. Again, don't let that headline mislead you. They didn't withdraw all the troops, but the word is that they've pulled back some of the troops. And so we're looking at then what effect does that have on crude oil? And crude oil, because if Russia had invaded the Ukraine, or they still could, if they do, it's expected that that will put a strain on crude oil supply, the supply chains and the amount of oil that's available globally. And if that happened, then obviously lower supply, still a high demand for crude oil, then prices would go up. So as there was fear of war, it was an impetus that was pushing oil prices up. And with the word that Russia was maybe pulling some troops away from the border and there's more talks going on that could work things out, then the fear went down of potential war. And so then oil prices slumped back down from the highs that they were reaching because there was less of a fear of disruption of crude oil supply. So that was the effect we saw on crude oil. And we can see here the futures market and the US market, when it opened, everything's green. Volatility index down over 7% still. It was down even more earlier. So it's given up a little ground in terms of as much as it dropped, but the fear is still down significantly. And when that happens, usually the US dollar also weakens, which is what we see here. The dollar index is down over 1/3%. So right in line with low fear, all of this little snapshot right here. Then we look at the economic calendar and we say, what's going on with the anxieties about inflation though? And the anxieties about inflation are still there. What we see is out of the US, month over month inflation, 1%. If you annualize that, that's 12%. If we've got an increase in PPI numbers from 1 month to the next of a 1% increase, well, there are 12 months in a year, so that would be that's ahead of pace for the annual pace, which is 9.7%. Nearly 10% year over year from January to January inflation, and 1% just from last month, from the prior month into January. And so not good news for those who are fearing this inflation. It's still very high, and there are numbers in other places around the world showing a similar type of trend. And so what is the fear about this hyperinflation, besides the fact everything costs so much now and the prices of things are outpacing people's increases in pay? So this hyperinflation is like getting a pay decrease, even if you're making a little bit more each month. And so the fear is that'll hurt the economy. And then also, because this hyperinflation, the nations around the world want to get rid of it, then there's fear that interest rates are going to go up soon as well. And the US has promised that they'll do something about the interest rates in terms of raising them maybe multiple times this year. And by multiple times, some are guessing 4 or 5 times even. And the first rate increase is being speculated that it could be a full 0.5% rather than 1/4% interest rate increase. So all of those things were pulling the markets down. The ease and fear today about Russia-Ukraine situation, markets rose back up some. But keep in mind, there's still this looming idea out there that stimulus measures are going to be cut back and interest rates will go up around the world and in the US. And that's what was pulling the markets down the past week or two. So we've got a balance here with optimism about Ukraine, Russia, but still fear there about inflation and maybe interest rates going up. So it's a balancing act where we probably can find a support level and a resistance level because they're two opposing forces here fundamentally. The happiness about, okay, maybe there won't be war, letting the markets go up, but the fear about, hey, inflation's too high, there's going to be an increase in interest rates, keeping the markets from breaking the all-time highs maybe. So we've got reason for a support level below and a resistance level ahead for a lot of these instruments. So we keep that in mind fundamentally as we start doing our technical analysis and we start to think maybe we can trust some of the support levels and the resistance levels to hold, because there's mixed news right now causing fear about one thing and optimism about another, and that many times results in ranging patterns on the charts. So we can look and see, maybe we can identify some ranging patterns already and try to take advantage of that with our technical analysis. And if you're wondering what's a ranging pattern, that's where the movement goes up and back down between a high point and a low point, where it's not trending up all day or trending down all day, but going up and back down, or down and back up, where you can identify a support and resistance levels where the movement is going in between those. And so we'll look and see if we see that or the potential for that to occur. And you can also plan for breakthroughs of those price levels with pending orders in case the news changes, because we never know when the next headline could hit and say, oh, Russia's invading Ukraine, never mind about the truce. You never know when a headline like that could hit. So pending orders placed strategically on crude oil and other instruments that we know what way they would go if that headline hit, could have a pending order beyond the important support level or resistance level, just waiting for that to happen. And then trade on what you know, with pending orders waiting for what could happen. And that's kind of the idea with your technical analysis, with a combination maybe of market moves and pending orders. Okay. Yeah, Natalie's saying Russia doesn't know about the attack on Ukraine. Yeah, they're saying the U.S. and NATO members are just crazy and fear-mongering, that we're the ones causing potential. When I say we, because I'm from the U.S., that NATO is the one causing potential war between Ukraine and Russia with all the rhetoric, and it has nothing to do with the 130,000 troops that were lined up surrounding 3 borders of Ukraine. I think the rest of the world might see it differently. That maybe putting 130,000 troops around 3 of 4 borders of your neighboring country might actually be the provocative measure. But we'll let everybody judge for themselves who's the provoker and who is not. Okay, so but it really doesn't matter necessarily for the markets. That's a conversation maybe for another point. So let's take a look then first at the app. And I'll give a full screen view of our mobile app. What's great about our AvaTrade Go mobile app and our web trader platform, you can trade on both your MT4 and MT5 accounts using the app and the web trader. And you have special features that make it nicer to trade using the app and the web trader than it is to trade on the MT4 and MT5 directly. Specifically, technical analysis help, fundamental analysis help, and risk management help within the order window. So let me kind of get into a little bit of that as we work out our first maybe technical strategy on the charts here. So if I click on this tab, let's make use of a tool that speeds things up for us. Forex featured ideas and analyst views. All of this is available in the web trader as well. Market Buzz is fundamental news articles on stocks. They're searched throughout the web and organized for you, time-stamped when the articles came in on any stocks that you want to trade on. You get the most up-to-date fundamental news coming in. Featured ideas and analyst views give you technical analysis signals. And so let's look at the analyst views. And we can see both cryptocurrencies and standard currency pairs are here with the signals. They're time-stamped, but even if the signal is a few hours old, it doesn't mean that it's no good. I'm skipping through the cryptocurrencies because some areas around the world are not allowed to trade the cryptocurrencies, like the UK and Canada. And so because we're following regulatory rules, those areas, if those folks are attending the webinar, they can't trade the cryptocurrency. So I'll pick something that everybody I know is able to trade in the different regions around the world. USD Swiss franc. It says intraday, the upside prevails. Why would the US dollar be going up if the dollar index is down today? Dollar index was weakening with dropping fear. Why is it saying the US dollar would go up? It's because it's paired against the Swiss franc. The Swiss franc is a traditional safe haven currency, more so than the USD typically. And so if fear is down, then people would be leaving the Swiss franc more than they'd be leaving the USD maybe. And so they're saying probably this would rise. So the signal is not just based on the technical analysis. It should also make sense to what you understand is occurring fundamentally. And then if we look at the chart, you'll see the technical analysis makes sense too with the price levels that are drawn. Maybe we look at something else. We can look at some different options, something that you think might make sense. USD JPY also says upside prevails. Okay, Euro USD up. That one makes sense, right? If the US dollar was weakening today, Euro should have climbed against it. And let's take a look. So I'm going to choose a signal that makes sense to me fundamentally. And then we take a look and see what's happening. Euro USD may rise 41 to 66 pips. That's the prediction on the preferred direction. So long positions above 113.05. So what it's saying is this blue line, that's a support level that as long as it hasn't broken below that price level, they're saying the buy signal is still good. If it breaks below the support level that they draw here, and the support level in these signals is always the blue level or resistance level if it was a sell position. So that support level, if it broke below, then they're saying you should sell. That's the alternate scenarios. If it goes below that price level, sell. So you could put a pending order below that blue line, a pending order, say at 113 flat, that if it hit that price, sell, and you take profit at suggested take profits, these two red lines. As long as the movement is still above the support level, then they're saying this should rise. And if it hasn't gotten near the take profit suggestions, then the signal is still valid as long as it's above this blue level and not near these take profit levels yet. So that's how you judge if it's still valid. Are the fundamentals still on the side of the signal? We see the US dollar is weakening because fear is down. And there's also high inflation shown, which high inflation means weak currency typically. So makes sense that the euro might gain ground today against the USD. The fact is maybe it already did, right? We'll take a look and see. And so you see everything's here, the technical analysis. Why would they suggest this first green line as the first take profit? Look over here. It's an old support level. Support, 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 and then it broke through and became resistance right here. You see? So the take profit is strategically designed to take profit right as it nears the resistance level, because then it might drop back down if it doesn't have enough momentum to break through it. So this is a signal that's based on price levels. The technical analysis is there, and also the professional analysts at Trading Central that are putting these out are obviously paying attention to the fundamental news as well. And then we'd see the alternate scenario that would only be if the support level broke. And so if it did break, then probably the news changed. Probably fear came back. And so your bailout point on your buy position might be to have a stop loss just below this support level, because if it breaks below there, then something changed fundamentally, most likely, to have that kind of reversal in technical analysis. Okay, so, and we could go on and look at more signals here. What I'll do is cut off the app right now, and we'll take a look at the full screen web trader as well, because it's also very nice to use. And so let me just get out of my app. There we are. And type OK if you're with me so far. If you understand what we looked at, how to interpret that signal, and if you're ready to move forward, just type OK. Or if you have questions, now would be a good time. Okay, looks like everyone's all right. I'll keep an eye out if any questions pop up. I know it takes a little while to type, and I think there's a little bit of a delay, time lag from the time you type your message and the time it comes through to me by maybe 5 or 10 seconds. Okay, so if you log in here, okay, whoops, here, the blue login, then you're in the web trader, which looks like this, okay? And it has the same features as the Avago app that we just looked at. So if you wanted those signals we were looking at, you click on the tab, go to Trading Central, and we have an economic calendar. Here's the featured ideas, the analyst views, those are the signals. Here's the market buzz, That's the articles that are available. So all live accounts have all of these features. We don't charge for these premium features, although if you went out with most brokers, those are services you'd have to pay for from Trading Central. But we think it's worth supplying these advanced services to all of our traders, because if it helps you be successful, then it helps us as a company to be successful. You're asking what is the outlook for US 500? Good question. Let's look at it after we look at the Euro USD. So we looked at that signal for the Euro USD, and so let's take a look what's happening with the Euro USD. So here are the 30-minute candles, and we see indeed the Euro has been rising today. Okay, if you look here, up, 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 nothing but up. Every time it tried to go down, it bounced back up. It tried to go down, it bounced back up. Look where it's having trouble going through is at this first resistance level. So remember, the signal was at that first resistance level. It looks like it about reached it. Okay, the euro was able to climb all the way up to 1366. I think that's right at that first green line where the suggested take profit was. So if you saw that signal was several hours old. So if we go back 3-4 hours, you could have gotten in on that signal down here. Okay, and already made 40 pips profit potentially. So time and time again, we're looking in the webinars at these signals, and a lot of times they're coming to fruition when we align the signals we like with what we know about the fundamental news and align that with the technical analysis from a signal that makes sense to us. More times than not, we're seeing that the signals have done well. Now, not every signal is going to win. You keep that in mind as well. We understand that no one trade is guaranteed, but if you align all the measures to be in your favor, you can improve your results, that's for sure. So now we see a resistance level. And we say, okay, we do understand that increases in interest rate out of the US are probably coming sometime in the next month or 2 or 3, and maybe multiple interest rate increases out of the US, and that tends to strengthen a currency. So in the bigger picture, as the joy about potentially no war between Russia and Ukraine wears off, then the realization sets back in that caused the US dollar to crash, to pull the euro way down here where it was last week. Then that realization comes back, and maybe potentially the US dollar re-strengthens against the euro. Okay, no guarantee, right? Maybe the euro keeps climbing, but fundamentally, if we want to speculate, maybe we trust this resistance level a little bit. Let's go to larger candles, see what it looks like. Okay, now we see it took a lot of momentum to get up above this price level. Look at the momentum of this candle, and it continued up to here. That was quite a momentous movement to get past this price level. Then that level became support, and then look at the size of this candle. It took a lot of momentum to break back below, and that became resistance. Okay, and that resistance started just earlier this week, right here. Okay, and really started on Friday, this breakthrough before the weekend, as the US dollar strengthened with all the war fears. So now, after the US dollar pulled the euro way down here to this support level, which was respected, the movement has come back up to this resistance level. Let's go to 4-hour candles. Start to see there's resistance back here at the same price level. Resistance and down. Resistance, down. Once it broke above, it became support. Once it broke below here, it became resistance. And this is the large momentum breakthrough to go up, large momentum to go down. And now here we are, right at the resistance level. So we're at a spot where you say, okay, if I think the movements are going to range today, meaning if I think the movement will hit and drop like it did here and bounce back up, drop off of where it is here, and then come down here, then I would sell. And from a technical standpoint, I don't even have to guess whether I think it'll do that. I can just sell, put my stop loss above the resistance. I have very little risk. If it breaks the resistance, I'm out. Stop loss here. Potential profit much larger if I take profit before the next support level down here. All it would take is someone to say something that puts this potential truce between Russia and Ukraine at doubt or in doubt. And if any doubt creeps back in, if the war fears come back, you could likely see this pull right straight back down. Okay, so fundamentally, there's a reason why this could come back down, or there's a reason why it could break through and climb, right? So we understand that. If more and more troops were pulled off the border of Ukraine, then you could likely see this break through as the US dollar weakens further. Okay, and this would be the next take profit up here on a breakthrough. So there's two things you can do here. One would be market sell with your stop loss above the resistance. So you can use AVA Protect. I'll show you how to do that. Okay. Someone's asking, trying to find the tools I showed. In the app, you click the tab that looks like this, these three lines. The tab is in the lower right, though, instead of the upper left in the app. And in that menu, you'll find them. Here, it's in this menu here. Okay. And in the app, it's in the lower right corner. But it looks the same. The tab has those three lines. And that's where you find those advanced tools. So if I go to 15-minute candles now, I say, okay, there's that resistance. It's still testing it. It has not gone into a downtrend yet. Still testing this resistance and could break through. No doubt that it could break through. But maybe over the next couple of days, you think it'll eventually, the fear will come back and it'll go down. If that's how you feel, then you could say, okay, I'll put a take profit. Let me go back to those 2-hour candles. You could say, I'll put a take profit down here near the low before this support level. So at 113 even, let's say, on a sell. Okay. And then maybe I say, I'll give it a couple days. I could by the hour or by the day. Maybe I give it a couple days of protection. The protection for 2 days, if it goes flying the wrong way, I only lose the cost of the premium. I have 2 days, I can wait it out. I don't even have to put a stop loss until my protection ends. And if it goes the right way, I stand to make almost triple what the premium costs here. Then I can go in and say, okay, what am I willing to risk on this move? Let's say I'm willing to risk, I don't know, 500 on the move. So then I start changing the trade size until the cost of the protection is what I'm willing to lose on the trade. So maybe I go one full lot. That would be 272, maybe 1.75. And there, almost 500 potential loss. Or I should say cost of the protection. Almost 500 USD. Cost for the protection, potential profit 1,100. Okay, and that gives me 2 days. I can wait without risking anything more than the premium cost. Now, if I prefer, instead of putting AVA Protect, I could just put a stop loss. Okay, so stop loss. I could say, okay, my stop loss I'll put above the resistance here. If it breaks the resistance, then I'm out. And maybe I say, you know what, I'm willing to put it up above 2 resistance levels here. If it breaks this resistance, I'm in. If it breaks this resistance level here, then I'm out. And I still would make a larger potential profit than risk. Okay, so you have different options there. You don't have to only put it just beyond the first resistance level. You can look and say, I'll put it beyond 2 resistance levels if you wish. Okay, that's up to your strategy, your risk management. Maybe in this case, I'll put it just above 114. Above that second resistance level. And then I come here and I say, okay, I'm risking 155 with that setup to make 1,090, which is less than the protection cost in this case. So now I can go larger trade size. 3 lots would risk 267. 6 lots, whoops, not 36. 6 lots would risk 534. It's approximately the 500 I was pretending I would be willing to lose. 5.6 there. Okay, so now with that lot size, you see the risk management was done for me. It calculated my possible loss in my account currency, which happens to be USD, and possible profit. Look at the better ratio actually by using my stop loss. And I even have the stop loss beyond not just one resistance, but this second resistance level right there, where this was support, support, and then it broke through and became resistance here. So I'm up above that resistance level, and actually I need to change my stop loss. 114.05 I wanted. So now I'm going to lower my trade size down. 1.4, 1.2, 1.1. Okay, there's 1.15 gets me at about 500. Okay, I apologize. I didn't put the proper stop loss price, but still better possible profit compared to possible loss. And that's with two resistance levels keeping my stop loss safe. And the potential profit is still greater than my risk. Okay. Let me see. Ali, you're asking, why are you taking sell position when dollar index is also moving down? Okay, so the dollar index has been down all day, and that's why the euro climbed against the USD. And now we found a resistance level here. So we're doing technical analysis. It's an old support level and it's a resistance level. And we talked about the fact that the news is somewhat mixed, meaning there's fears about interest rates being increased sometime soon in the US, and that's been causing all of this dropping of the euro against the USD. Those fears are still there and have been solidified more by near 10% inflation numbers coming out in the US in today's data. We looked at that before we started. So as I was setting this up, I talked about that. Said we have opposing forces here. One causing the US dollar to weaken today, which is less fear about war. And the other, which has been causing the US dollar to strengthen, which we see on the chart, all this dropping of the euro against the US dollar as the US dollar strengthened because of fears that interest rates will go up soon in the US. So we've got these opposing forces still. So what I said was, this is a resistance level that easily could be broken with today's news about less fear about war. And so the US dollar's been weakening because a lot of times the US dollar weakens when there's less fear. And so it is possible this resistance could break, which is why we've got a stop loss to limit our loss if you're wanting to make this technical move, to trust the resistance level when there's two opposing forces here. And we talked about at the start of the webinar that we will look for potential ranging patterns. So a ranging pattern would be where it's not just breaking through price levels, but where it's doing this, where it hit and dropped, and then hit and went back up, and then hit and potentially drop. If we're wrong, we've got our stop loss at a risk level that is appropriate for you if you're making this move. Obviously, Ali, I'm not saying you have to make this move if you don't agree that it's a strategy you'd want to do. It's obviously for educational purposes here. So that's one possibility. And it's up to you how far you'd want your stop loss away. We've got better potential profit than risk. And if you like that setup, boom, you make a move. Now, the opposite, Ali, you might be interested in the backup move that I was planning to show. If it does break this resistance level, you can have a pending order to buy if it confirms upward momentum by breaking this resistance. So if it hits 113.73, you might be interested in buying on this. So if we then click buy on euro dollar and say execute when price hits, we say if price hits maybe, execute when the price hits if it hits 113.73. So Ali was ahead of me a step here. If it does break through with the upward momentum that we've had, then you can have a pending order ready to buy with a take profit just before the next resistance level at 114 flat, or at the next resistance level up here, if you think the momentum could continue. And that might be more worth your while to shoot for a higher price potentially that it was at not that long ago. So let's say 114.65 is your potential take profit. And your stop loss then, if it triggered a buy from up here, your stop loss then would make sense to be back below that price level, because if it's a true breakthrough and it keeps climbing, then it shouldn't go back below this price necessarily to hit your stop loss. So maybe at 113.60, you might have a stop loss. Okay, and so now we're looking at, oh, I'm sorry, I changed my execute when price hits. Wanted 113.73, and my stop loss is down here at 113.60, we were saying. Okay, so 13 risk, 92 potential profit. And maybe we even want to be more secure with the stop loss and say 113.55, put it down a little further, and we still have a nice ratio, potential profit to risk. And then you go up for your risk management, and you say, okay, I was willing to risk 500, and what trade size will get me there? Let's say 2.5 lots. Would risk 450. It's close. 2.7 lots would risk 486. So 2.75 maybe is just about 500. If that's what you want to risk, you have to determine how much do you want to risk per trade, and then come up with a trade size that makes sense. So first you do the technical analysis, then you do the trade size to put the trade size based on your amount that you want to risk and the potential profit you're going after. It's a nice ratio. You set up. If it hits that price, you're in, buy. So in one case, we're selling on a market move because it feels like a day where we could have some ranging patterns with mixed news going through the evening. But with limited risk, we're backing that up with a potential buy position if the resistance level breaks through, with a much better potential profit than risk on that setup as well. Okay. The moving average indicators, Alex, that you use, the settings, depends on your strategy, how far back you want to look in the settings. And it depends, are you looking at 1 week candles, 1 day candles, 1 hour candles? And so you can determine based on what you're looking at, how far back in the moving average settings do you want to look? Usually it has some sense to it. Moving average, looking back, if you're on 1 day candles, maybe you're looking back 20 or 30 days because that's 1 month, right? 20 trading days approximately would be 1 month. If you're on 1 week candles, maybe you're looking back, 50, because you're looking back 50 or 52 candles to be 1 year. So depending on what you're looking at, 1 hour candles, you might look back 24 because that's 1 day, etc. So it depends how you set your moving average look back, how many candles will it look back, etc. And that goes for lots of indicators. What settings you might use depends on maybe what candles you're looking at and what your strategy is in terms of time frame that you want to look back. What sorts of things do you find important, and that would determine how far you should look back as well. So we've got an open position running that's dropped into a nice profit early on because of that resistance level. And a lot of times, even if you think it could break through that resistance, like I think Ali was saying he thought it could break through, in the short term, many times it'll pull back from the resistance, even if it's eventually going to break through. So a scalper would maybe have already taken profit selling off that resistance, knowing that there's some opposing forces, just to take the quick profit as it hesitates at the resistance point. It's a strategy as well. And then the pending order is just waiting in case that first one goes wrong. If it breaks through, you're in on that. Now, any other instruments before we end things? We've been going about 40 minutes, but we could take a look at another instrument if someone has something they prefer to look at. Okay, Dow Jones, so US 30. Okay, Dow Jones, US 30. What do we see here? We see on the 15-minute candles, momentum up today. Okay, makes sense. There was some optimism because of the Ukraine-Russia, somewhat good news about maybe troops pulling back a bit. So markets went up, US dollar weakened. That seems to have capped itself a little bit right now. Why would the momentum die? Well, because there's still potential for war. It's not all done yet. And there's this whole looming inflation problem with potential interest rate increases coming, which is why the market's pulled down in the first place. So maybe if you're kind of gloomy about these interest rate increases in terms of the effect it'll have on major indices like the Dow Jones here, maybe you consider this spike up an opportunistic spot to sell from. Okay, that's if that's how you view the fundamental situation. So we see some resistance. Let's go to the larger candles, 2 hours. We see why the resistance formed here. It's classic. It happens time and time again with risk management. We see this was an area of support and resistance, support, 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 breakthrough becomes resistance right here. So this price level, it makes sense that there's some resistance there. Now the question is, will it break through? And the answer is maybe. This is set up just like the Euro USD, isn't it? It's exactly the same as the Euro USD. Resistance here, you could have a pending buy order here, a buy that if the price breaks through the resistance and comes up here, you could buy with a take profit at the next resistance level. And currently you could sell, and if it breaks through the resistance, you have your stop loss here, and the buy position kicks in. You sell below the resistance, thinking that potentially some fear could come back about interest rates, and you take profits down here somewhere. Exact same idea, the same setup, except instead of Euro USD, it's the Dow Jones. But they're reacting to the same thing. That's why they look the same. A lot of times there's similar movements between something like the Euro USD and a major index. Not always, but in this case, it's the same forces driving these movements. There's the potential for a breakthrough. So if you're selling, you probably want to limit your risk and be ready with a pending order in case it does break through the resistance. You see, we're setting this up similar to those signals from Trading Central. The preferred direction and then a backup in case it goes past the price level, the support or resistance level in the opposite direction. So it's the same idea. So if we go back to those small candles, you say, okay, there's that resistance. Okay, so if you're selling, take profit is somewhere down here near the first support level. You can enter the price. The stop loss is somewhere above this resistance. That's one example of how you could set it up with your risk management. Very, very simple stuff, especially with the web trader doing the risk management for you. It makes it simple to know how much you're risking and what trade size to take. Natalie, I can see what you're thinking from what you're typing. Yeah, the news does move things. Absolutely. Whether it's real news or fake news, if people believe it, it moves the markets. Absolutely, for sure. Real troops on the border, along with maybe exaggerated headlines, can move the markets. And I think probably both sides play a role there with why there was the thought that there potentially could be some conflicts. Okay, so I think this is a good spot to stop. I know someone was asking to look at crude oil. We'll take a quick peek at crude oil. We see crude oil pulled down. Why? Because, hey, maybe there won't be war. Maybe there won't be a disruption in oil pathways and supply and natural gas, etc., from that region of the world. And so oil prices go down when there's the realization that, hey, there may be more supply available than we thought. Okay. Now, still, there's a lot of demand for crude oil, more than the supply. Increases in demand tend to drive up price. And so this could rebound back up. If you see a rebound down of the Euro USD, you likely could see a rebound back up of crude oil. It's kind of a weird situation that if the USD strengthens, that crude oil actually still could climb up And it's because of these different geopolitical situations that are going on. But listen, purely technical analysis on crude oil without trying to figure out the science behind it, since this is a technical webinar, you could buy on crude oil, put your stop loss below today's low, right? And say that's a heck of a support level down there and see if it can reach the high that it was at not that long ago. That's like taking a shot at it just with technical analysis. You know, if tensions flare back up with the Ukraine and Russia, certainly crude oil could even go higher than this high. Or if more good news comes out, crude oil could come down below today's low and drop further. So again, this is being controlled largely by these geopolitical situations that are occurring. But the technicals are there to think that this could easily climb back up, at least to this resistance level here in the short term. All right, everybody. Thank you for joining. I think you'll have some nice potential ranging movements, retracing potentially some of the movements that occurred. But as I say, be ready for the opposite with your pending orders. If price levels break through, you can have pending orders waiting, just as we demonstrated in tonight's session. All right, everybody, good luck with your trading. Till next time, bye for now.